Okay, so let's talk about something about FOMO. Let's talk about how to be a profitable trader. This is basically a trading psychology lesson, and it's about staying out of the markets, because so many people, they have this idea that for them to be traders, they need to be in the market. A trader trades. This is what most people think. You come from a 9-to-5 job and you believe that the only way that you can make money is by exchanging your time for money. That is not the case. That is not how you make money in trading. In trading, the way you make money, the way you are going to make most of your money is by waiting. And don't get me wrong, I'm not saying that you are going to be making money when waiting, when you are not trading, but the most important thing is you are keeping it. What does it matter if you made $100,000 if you then lose $99,000? Because the person that waited and made $2,000 is better off than you. So that is one of the important things for us to think about as traders. A lot of our money is going to be made, it's going to be kept outside of the markets. You are so focused on growth that you forget that a smooth, bullish equity curve is actually what you are looking for. And so the way you fight FOMO, the way you fight being out of the market, is by understanding when and when not to trade the market. And I've made a whole video about this. You've watched the video on when to trade and when not to trade, right? That video has already been there. But a lot of you are not going to be able to process that because you are going to be wanting to be in the market. But in the market, that's when you are going to make money. Yes, that's where you are going to lose money too. And so as a trader, we need to leave this mindset of exchanging time for money. With trading, input does not equal output. In your job, it does. If you work 8 hours, you'll paid 8 hours. You'll be paid 8 hours. But if you trade for 8 hours straight, I can probably make as much R/percentage/money as you by simply trading for 15 minutes at the right time after waiting for my right confluences, trading in and out. Because as you are trading for the 8 hours, forcing yourself to be in the market because you think you are going to be making more money, you are going to be making some, losing some, making some, losing some, and then you are going to enter in a losing streak, and then you're going to be like, oh my God, fuck this, and then there you go, you blow your account. Well, the person that just waited had way less input, made way more than you. Because don't get me wrong, if you are negative and I am break even, I did not make more money than you, but I kept all of my money and you lost some. That's what you need to understand when it comes to trading. You cannot expect to be a professional trader and trade every single day. You cannot expect to be a professional trader with a profitable edge and that edge to present itself every single day. Yet every time you come into the markets, you look for a way to trade. There are times where you should not be trading. If we have CPI, if we have NFP, if we have FOMC, if Trump is speaking, if whoever is speaking, and it's going to be a highly volatile event, you should not be in the market. The market is going to be range bound. The market is then going to be extremely volatile. And yes, a lot of people look at the market in hindsight, and this is part of the reason why they have so much FOMO. They look at the market in hindsight and they think, I knew the market was going to go there. But guess what? If the market had not gone there, you would pat yourself on the back and say, ha ha ha, I knew it. I should not have been in the market. I am a professional trader. Yet, when the market does move and you're not in it, you start feeling FOMO. All of your emotions are counterintuitive to what you should be doing in these markets. If your decision is, there is nothing for me to trade today, the market is stuck between a bullish and a bearish PDRA, I am not going to trade. If the market then decides to move 2,000 pips, you should be fine with not being in the trade. A lot of traders FOMO comes from the fact that they don't understand that tomorrow there's another trade. Tomorrow there's another movement. Tomorrow there's another news release. Tomorrow there's another thing that is going to happen, that the market is going to move. You would feel FOMO if the market would I would give you reasons to feel FOMO if every single time the market moved for the next year, it would not move. If you had one day out of the year for yourself to trade, and all of the other years were range-bound bad price action, I would tell you, try to take the trade. Try to find out when that day is. But with us, it's different. You don't take a trade today. You take a trade tomorrow. You take a trade the next day. You take a trade the next day. Doesn't matter. Doesn't matter if you're not trading for a week. Because while you are not trading, thousands and millions of traders are losing. So you can either not trade range-bound price action, or trade with all of the other traders and lose. Between not doing anything and losing, you would 100% choose to not do anything. Yet you still decide to trade. When the market is not there, you need to trust your edge long term. If the market moves while you thought the market was not going to move, well, maybe the other 5 times the market did not move. And you thought, oh my God, my edge is so good. But then when it finally does move, when you decided not to trade, that's when you're like, oh my God, maybe my edge doesn't work. You were wrong 1 out of 5 times. Yet we have this recency bias, which is basically reacting based on recent events. Like that's the downfall of so many traders. It's recency bias. It's okay, the last time that it was 1 day before CPI, or the last time we had CPI, the market moved in my direction, and that's why I should actually trade the CPI. When recently, like the only thing you saw was the market moving in your direction, but what about all of the other times where you would have been destroyed? But recency bias completely destroys you as a trader. Right? Because you're only thinking about the times where it would have worked out. You never think about the times where it would not work out. Because we remember when we lose, but we also remember when we miss out on profits. Those are the 2 most negative emotions we can have as traders. Is remembering when we lose, these are the most negative, and seeing the trade run without us. Those are the 2 worst things. Yet, the only thing you remember when it comes to recency bias is when the trade played out, because you completely want to forget the times where it did not work out in your favor. So when it comes to FOMO, your number 1 goal is understanding not every day is a trading day. And if you decide that today is not a trading day, get off the charts. Use Trade Blocker, right? Just activate Trade Blocker as soon as you wake up. New York session, activate Trade Blocker. Just don't stare at the charts. Do not allow yourself to go to the charts. Do not allow yourself to go to MetaTrader. Do not allow yourself to go to TradingView if needed. Because that's when you are going to feel emotion. So the number 1 way for you to stop having FOMO is understanding that your edge is there for a specific reason. And if your edge is there for a specific reason, if you want to become a professional trader, your number 1 job, the only job you have, is following the statistically profitable plan. So if I tell you, you now have all of the tools you need in order to become a profitable trader. You have everything you need. You have the strategy, you have the risk management, you have everything. You understand the foundations of trading, you understand the foundations of psychology. Now you are still wanting to trade every single day. I've already told you we don't have a trade every single day. We don't have a trade every single day. Yet, you are not going to become a profitable or a professional trader If you want to trade every single day, it's not going to happen. It's not going to happen. In January, I only took 4 trades. 4 trades or 5. Yet I was profitable. How many of you have losing months because most of the mistakes you made was when you were not supposed to trade? When the market is not showing you clear direction, yet you still trade because you want to forecast that direction. You want the market to move. But that is not the way you become profitable. That is not the way. You want to get jacked, but you cannot go to the gym. You want to run a marathon, but you can't run 5 miles. You need to understand that if you want to become a profitable trader, you need to know when not to trade and actually not trade and follow your plan. You want to lose weight, yet you're still going to McDonald's every single day. You want to lose weight, but you have a plan, you have a meal plan, and you don't follow that. It says 1 cheat meal, you have 3. It says that on the cheat day, you can eat, 3,000 calories, yet you eat 5. But on the gym routine, it tells you that you need to do cardio every single day, yet you only do it once a week. How do you intend to reach your goals if you are not able to follow a plan? It does not matter what you are going to do. It does not matter if it's drop shipping, if you decide in 2 years that trading is not for you. It doesn't matter if it's drop shipping. It doesn't matter if it's crypto. No matter what it is, you will lose if you are not able to follow a plan. This has now been given to you. The possibility of you making thousands of dollars lies between you being disciplined and you being not disciplined. If you are not disciplined, you will not make thousands of dollars. If you are disciplined, it might take a little bit. You might have to learn from some mistakes, but you will be able to do it. I made 90+% last year, and it all came from discipline. Sticking to the process. Do you think that even though I made more than 90%, that I did not have losing trades? That I did not have times that I did not trade? That I did not have weeks that I didn't trade? That I did not have trades that were losers and I still then had to wait a full week until my next trade came? Of course. But would you like to have 90+% this year? Well, if you want consistent profits, you need to understand that your goal as a trader is to execute when your edge is there. If your edge is not there, you do not execute. If it's not, and sometimes your edge not being there also means I do not trade until this happens, until FOMC is over, until CPI print is out, until NFP print is out, until this Donald Trump speech. I do not trade until then. If you're trading anywhere before that, if you have FOMO, oh my God, but the market is moving in my direction, that is stemming from the idea that you do not understand that tomorrow is another trading day. Tomorrow is another trading day. I have missed hundreds of trades. Okay, maybe dozens of trades. I probably missed maybe 80 trades. I don't know. Let's say hundreds of trades, whatever. I've missed hundreds of trades. I'm still a highly profitable trader. There are times where I still miss trades. There are times where the market moves without me. There are times where the targets are reached and I am not in any trade. Yet that is fine because I followed my plan. I followed my plan. And let me ask you, how many times have you entered in a trade that you entered because of FOMO and it was an amazing winner and you would do it over and over again? Very, very, very few of you have that experience. Very few of you have the experience of entering a trade with FOMO and still being in the trade and making profit and making good money. And doing that consistently over and over again. Most of you know that when you enter any trade that is not in your trading plan, it's going to be a loss. But why? Why are you always, you have this scarcity mentality that no, the market has to move, and when it moves with me. People have this all the time, like this scarcity mentality that no, I have to take advantage of everything. It's like thinking, it's like those people that eat so much because they think that, like, it's like a, how do you call it? It's like those animals that if you give them food, they will absolutely tear it apart because they think that this is the last time that they're going to eat. We don't live in the wilderness. We do not live in the wilderness. Tomorrow is another trading day. Tomorrow is another opportunity to forecast our trades, to execute on our trades. And if nothing appears, you don't execute. And if and you need to understand, every time you trade, you need to have forecasted that trade. If you don't forecast in the morning, you shouldn't even be trading, right? Because if the trade is not in your forecast or in your, because forecast and plan are going to go hand in hand. If the trade is not in your forecast, you should not be taking that trade. And if the market goes to the area that you forecasted, to the target that you forecasted, and you are not in it, be happy. Because you proved that you can forecast the direction. A lot of traders, they think that if they forecast the direction right, and that they don't execute, that is actually losing. It's not. It's the opposite. It's winning. You are a winner if you can forecast the direction consistently. If you consistently forecast the direction, you are a winner. Because eventually, it's all about the execution. I've told you, what is a trade? A trade is direction and execution, right? What is a trade? Direction and execution. If the direction is there and you are mastering the direction, it's a matter of time until you become profitable. It's a matter of time in which you forecast the direction, it plays out, and you actually execute in line with the trade. But all of you are just so focused on trading every single day. You know what? Let me show you. Let me show you something right here. Because a lot of people think that you want to trade all the time. Listen, you need to understand that not always are you actually going to have even ranges for you to trade, right? Because if the market, let's say you have a 20 pip stop and you want a 1-to-1, it's not always that the market is going to move 20 pips in your direction. We have extremely range-bound price action. Like, look at this. For a long time, notice how we barely moved, like no movement, right? I believe, if I'm not mistaken, this was all presidential election, right? So here, during presidential election, what was happening is that the market wasn't moving at all, no movement at all, and then just boom, tank. No movement, tank, right? No movement, move up. Then range bound, boom. You would just be chopped up here completely. You would have been absolutely smashed as a trader. And if you really do think that you could have catch this high, I have news for you. You could not. I don't care. You could not. And if you could, you probably blow it in some other way because you're a gambler, right? And gamblers are not going to make it long-term in trading. But, for example, now that you know when to trade and when not to trade, especially given the daily bias, you will be able to avoid this type of price action, right? This type of price action has nothing in for us. But for some reason, you want to forecast that this high is gone. But while that is happening, you're taking loss. So you take, for example, -2, and then when the market moves, you take a +2, you're at break even, right? And I'm at +2. Was it that worth it? All of this, when we're talking about FOMO, and we're talking about knowing when to trade and when not to trade, and we're talking about being out of the market, you need to have confidence. You need to understand, just like you understand that we are not in the wilderness, and you do not have to eat 50,000 calories today so you survive for the next 10 weeks. You also need to understand that you do not need to take 50,000 trades today to survive for the next weeks. A trade is going to be there tomorrow, just like you're going to have food on the table, hopefully. Just like hopefully you're going to have food on the table, there's going to be a trade tomorrow. The market is open tomorrow. The market is going to be open on Monday. The market is not going to close. The market is not going to go anywhere. Anywhere. AI is not going to replace us. CBDCs are not going to replace us. There's not going to be one standard currency, which means FX would be its demise. No. Nope. Never going to happen. It's not going to happen. Right? It's not going to, nothing. Tomorrow, there is another trading day. The next trading day, the market is going to move, and that is going to give us opportunities. That is going to give us opportunities to take advantage of the market moving in the direction that we forecast. Trading is absolutely beautiful. I absolutely love trading, especially because I know when to trade and when not to trade. I know when to go ham and I know when to stay away. That's why I've been reducing a little bit the amount of trades that I personally take, but I showed you multiple ways of you taking more trades. And I'm just focusing on higher probability setups. I just take it with more size and I make more money than I did for a long time. Right? So anything, when we are talking about staying out of the market, it comes down to looking at the bigger picture and understanding tomorrow is another trading day. Tomorrow, the market is going to move somewhere. And if I forecast the direction right and an execution presents itself, I will take advantage of it. That's all that the market is. So patience is a virtue in trading. Patience is what distinguishes a lot of profitable and unprofitable traders. A lot of you are already profitable. You just are not patient enough to keep your profits. Right? So that being said, always look at the bigger picture. Always look at the bigger picture. Because the scarcity mentality is going to make you lose everything. It's going to make you an unprofitable trader. So that is how to stay out of the market. Look at the bigger picture and understand you want to become a professional trader. A professional trader does not trade every single day. You want to become a professional trader. Do not trade every single day. Tomorrow is another trading day. Eventually, another trading opportunity will come. If you understand these three things, staying out of the market will be way easier. Hope you enjoyed. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.